CrowdStrike is a high-flying cybersecurity stock that just released its earnings this evening, so I figured now is the perfect time to check out the company, see how it's growing, and figure out if now is a really good time to invest. But before we dive into the financial numbers and look at their recent earnings report, let's figure out why CrowdStrike is different from the rest of their competition. Where other security products are often quite expensive, have a lot of complexity which causes bloat and slows down systems, and miss many new attacks because they aren't currently reinventing themselves, CrowdStrike employs a multi-layered network that starts as a single agent and is protected by many layers, including an AI native layer which uses machine learning, behavioral AI, and other large language models to essentially continue to redefine its security parameters and adapt to new attacks as they occur. And from this chart here, we can see that CrowdStrike has been at the forefront of incorporating AI into their security for a very long time. As far back as 2014, we can see that they have included their AI-based malware classification Falcon Prevent in their products, and they have continued to develop their AI ever since. And what is really incredible is that the AI native security platform currently has a total addressable market of about $100 billion. And by 2028, that number is expected to grow to $225 billion, meaning the cybersecurity industry is set to more than 2x in just the next 4 years. And moving on to some earnings news, we can see that CrowdStrike's report that was released today, quote, lacks oomph, even though the company has had some major gains in 2023. The company did top earning and revenue estimates for the quarter, but in after hours, the stock still dipped by 2.4%, largely due to its forward guidance. And the key number to watch for CrowdStrike currently is their annual recurring revenue, or ARR, which has increased by 35% to $3.15 billion in the third quarter. But in less good news, management now expects for 2024 to see flat to modestly higher ARR. As I've said many times on this channel, when a growth company stops growing, Wall Street takes notice, and that is why currently CrowdStrike is down by a few percentage points. If you have been invested in CrowdStrike since the beginning of 2023, though, you're probably not too worried because the company has jumped by over 100% this year alone. And always, before we get into the financial numbers, please take a moment to like this video and subscribe to my channel. We've seen some really amazing growth so far, and I can't wait to keep bringing these videos to you guys. So with that, let's get into it. CrowdStrike's revenue has grown by over 80% per year over the last 5 years, which is just absolutely incredible. The company is not currently GAAP positive, but that number is improving. And I do believe the company can achieve GAAP profitability in the near future. Their operating earnings turned positive in 2021 and have grown very, very quickly, being literally negative in 2020 to a positive $1.54 per share in the trailing 12 months. CrowdStrike's gross margins have only improved by about 3% per year, but that's a very nitpicky, considering the fact that the company's gross margins are regularly in the mid 70 percentiles. This is excellent, and it's the sign of a very profitable company in the future. Because CrowdStrike hasn't turned a GAAP profit yet, their annual operating margins do still look negative, but they've improved quite rapidly, and once this company does earn a GAAP positive revenue, this number should shoot up very quickly. The same can be said for return on assets, which I expect to turn positive and rocket higher in the near future. The company's shares outstanding have seen a big jump in 2019 following their IPO, which is to be expected, and they have continued to dilute shareholders since then. And while this is common for growth companies in their very early stages, we should hope to see this dilution eventually slow down to the point where the company is no longer diluting shareholders and is maybe starting to talk about stock buybacks. The company's cash on hand has rocketed higher from just under $200 million to over $3.1 billion. And in my opinion, it's never a bad idea to have some cash on hand, so I love seeing this. CrowdStrike did take out some debt in 2020, but this amounts to just about $750 million, which is very, very manageable for the company, and I'm not worried about their debt load at all. In fact, the company's net interest expense is actually very positive because the cash they keep on hand is earning more interest than they pay out for this debt that they carry. Levered free cash flow has also expanded very, very nicely, along with free cash flow per share, so I have zero complaints about this company's cash flows or the balance sheet that it holds. And with this video, I've decided to debut a new chart, and I may have picked the absolute worst stock to start out with, and that's nothing against CrowdStrike. It's just the fact that it's a growth company that's been all over the place as far as its price to earnings ratio is concerned. And so a lot of the detail gets lost in just the very, very high numbers that we're working with right here. But essentially in this graph, the black line follows the price to earnings ratio of CrowdStrike at the end of every given week since it had a positive operating earnings in 2021. So for example, when CrowdStrike first turned its first operating profit, the company came in at a PE of 828. It then traded all around and peaked out at a PE of about 1,053, which is absolutely insane, and it proceeded to crash. Now, PEs can crash one of two ways. Either the stock itself crashes or the earnings of the company increase very rapidly. So I think a little bit of both occurred here with CrowdStrike, and we can see that it fell all the way through January of 2023 down to a PE of 61 and has since climbed to a PE of 137. This red line represents the average PE over that time, which is about 415. And like I said, for more established companies, this chart is going to look a lot more interesting and it's going to provide us a lot more information. But I just wanted to show off this fun little graph that I'd made, and I will continue to utilize it in all of my future videos so we can see more historical breakdowns on where a stock is trading against its historical self. And moving on to the more familiar value chart, we can see that CrowdStrike has been trading at exceptionally high PEs. The purple line is showing a fair value PE of 139, which matches the company's growth rate. And even then, for most of CrowdStrike's history, it has traded well above its fair PE based on its growth rate. Now, what is interesting is that the projected CAGR of this company is 40% per year. And so that means two things. One, CrowdStrike is growing incredibly quickly, and you could probably buy this at almost any price as long as the company grows that fast for that long. There's almost no way that you could lose money, at least in the near future. But what is more interesting for me as a value investor is that I believe that the compound annual growth rate of a company should be that company's fair value PE if that growth rate is over 15. So I'm going to change its fair value PE to match this at 40 times earnings. And we can see in this case that CrowdStrike is massively overvalued from my estimates. In fact, I would say that the fair value of this stock today is about $61. And even by the end of 2026, its fair value is only $170.52 versus its current closing price of $210.66. But like I said, if the company can grow at 40% per year for the next 5 years, and then maybe after that 5 years, it even slows to like 20% or 25%, I mean, that is insane growth. And that's just the game you play with growth investing, is sometimes you pay ridiculously high valuations for a company like you would today with CrowdStrike, and it still pays off because the company grows enough to justify that valuation. Will CrowdStrike grow that quickly? I don't know. Nobody knows. That's for the future to tell. But if I had to bet on one industry to really have exceptional growth, cybersecurity might be that industry. And that transitions nicely into what I like about this company. The most interesting thing for me is that cybersecurity, just as an industry as a whole, will have massive growth into the future. More and more things are going online, more and more things are becoming automated, and with the integration of AI into our lives, we're just going to need security to make sure that these devices remain protected and that bad actors cannot hack into literally anything that is sitting in our homes. So I have no doubt that cybersecurity as an industry will grow significantly into the near future and probably for much of the foreseeable future. I also really like that CrowdStrike is an industry leader. They have very innovative ideas and their products stand out. The company does win many awards for its cybersecurity. And so I think if you are investing into the cybersecurity space, CrowdStrike is probably one of your top targets. And third, I really like the recurring revenue model. That's definitely the theme of most companies in the world these days. If they can have a recurring revenue model, they're going to. And that just makes their cash flows more predictable into the future, which is really great. It makes the company's future cash flow more stable. It makes the company easier to predict, and it allows customers to use products at a lower initial cost instead of having to pay hundreds of thousands or millions of dollars up front. They can just pay a monthly fee. So it's easier for everybody involved. On the con side of things, for me, it's still difficult to like CrowdStrike when it's not GAAP profitable. And I know that's quite a nitpicky thing, but I try to value things as best I can off of their cash flows that they create. And if the company's not actually making a GAAP profit, that just makes it a little bit more difficult to value a company. Secondly, cybersecurity is a highly, highly competitive industry. I mean, every big player you can think of in the tech space is trying in some way, shape, or form to be a part of it. And on top of that, there's just many startups, many other companies that are involved in this industry. And it's difficult for me as an investor to know exactly which companies are going to be the most successful, not only like 2 years into the future, but like 10 or 20 or 30 years into the future. Which leads me into my final point, that cyber defense usually lags cyber offense, meaning hackers tend to have the upper hand because they're the ones that are creating the new weapons, and these cybersecurity companies have to react to the weapons or the viruses, the Trojans, whatever you want to call them, that these bad actors create. And so this can really come back to haunt certain companies. I mean, recently we saw that Okta, another publicly traded cybersecurity company, had been hacked themselves. And so that can really damage a reputation. One hack is all it takes to really, really damage a company's reputation. And since cyber attacks are quite often just a little bit more sophisticated than cyber defense, I sometimes wonder if it's almost an inevitability that each one of these cybersecurity companies gets hacked in the future. Maybe I'm just being over defensive or over skeptical of their products. I'm certainly not an IT genius, but that's something I think about quite often. And as Warren Buffett and many other investors have said, do not invest outside of your circle of competence. So with those things in mind, for me personally, I will not be investing in CrowdStrike. mostly because of the very high valuation and the fact that I just really struggle to understand cybersecurity companies. Now, if CrowdStrike was to drop to a very low PE, something like 50 or 40 or even 30, then that would be something far more interesting to me, and my need to understand the company would be less important if that deal is as good as it would be. But with a PE of over 150 right now, I find it very difficult for me to want to invest any money into a company that I struggle to understand. But that's just my thoughts. What are your thoughts on CrowdStrike? Do you own the company? If you do, what is your investment thesis? What makes you so confident that you want to invest in CrowdStrike? Because I'm genuinely curious to know, to find out. And so with that, if you enjoyed this video, please like it and subscribe to my channel. And with that, I hope you guys have an amazing day. Bye.